I live in Canada, but I have a house in India. The new renter wants to teach music classes inside the house. There is water all over the living room. You gave away my keys? To who? Investment is supposed to bring me peace, but if the house is far away from where I live, managing it becomes a full-time job. But I want to invest in India because I believe in India's long-term growth. I want diversification and I want to park some money there. But most importantly, I want liquidity, that is being able to sell and get the money back to my country of residence whenever I want. These are the reasons why I would invest in the Indian stock market. I am not a financial advisor. I am a long-term investor who has been using Zerodha for the past 6 years. Not just because they were the largest stockbroker, but because of Varsity, their free educational platform that has improved financial literacy among first-time investors. And now with their KITE app, I get full control to track all my investments back in India. So it doesn't matter if you're brand new to Zerodha or had an account with them in India. Today, by the end of this video, you will know exactly how I use it to invest in the Indian stock market. Because in today's video, we are going to see investment options available to NRIs, demo of how I buy and sell shares of companies using the KITE app, brokerage charges and taxes for NRIs. And towards the end, I'll give you a bonus tip to help you avoid the mistake I made while I was a beginner in the stock market. But before that, if you like this video, don't forget to hit that like button because it tells me that I should keep making more videos. So without further ado, let's begin. In the Zerodha universe, there are two types of NRIs. Those who are brand new to Zerodha and those who had a resident account while living in India, but now need to convert that to an NRI account. No matter which of these two categories you belong to, the first step is the same. Let Zerodha know that you're interested in opening an NRI account with them. To do that, you can scroll down to the description of this video and click on this link. You using this link will also help support this channel. It'll take you to the Zerodha NRI sign up page. Here, you can click on the sign up button. Enter your email ID and the OTP you receive on your email. And this is where you can choose either NRO or NRE, depending on the account type you want to open with Zerodha. I'll tell you the difference in a minute. Click on continue. My WhatsApp is still on my India number, so that's what I entered here. Then the OTP. Click on continue and the Zerodha team will help you with the account opening process. Step number 2 is to figure out what account type to open with Zerodha because that decides what investment options are available to you as an NRI. There are two types of accounts, PIS and non-PIS. Wait, it just sounds complicated, but it's pretty simple. Here's an article that lists their differences. But if I had to sum it up, I'd say that if I want to invest the money that I have in India with fewer restrictions, then I'll open a non-PIS account with Zerodha. But if I want to invest my foreign income in India, then I'll open a PIS account. This video explains the differences in detail, but the investment options we're going to discuss today can also lead you to your account type. So let's look at that first. Here's an article by Zerodha that lists the investment options available for both account types. But for any of this finance gibberish to make sense, let's discuss 7 basic investment terms mentioned in this article. Term 1, equity delivery. When you buy shares of a company, you become a part owner. This is called having equity. So equity delivery means purchasing those shares and holding on to them in your demat account for days, weeks, or even years. This is what long-term investors like me do because I believe in buying and holding quality investments over time. Term 2, intraday trading is when you buy and sell shares on the same trading day. For example, let's assume you buy 10 shares of TCS at 3,000 rupees per share in the morning and sell them at 3,050 rupees in the afternoon. Then the 500 rupee gain is your profit. The goal of intraday is to take advantage of short-term price movements. But it carries high risk because stock prices can change very quickly. Term 3, bonds. It's a loan that investors like you and me give to the government in government bonds and companies in corporate bonds. They are considered safer than stocks and your principal amount is returned after a fixed period called maturity. They provide stable returns rather than high growth. Okay, Pay attention. IPO, initial public offering, is when a private company in India offers its shares to the public for the first time through the stock market. Once the IPO is completed, the company gets listed on a stock exchange where its shares can be bought and sold. But before that, if you apply for an IPO and are allotted shares, you have two choices. You can sell them immediately after the company gets listed on the stock exchange to capture short-term gains because prices often jump on listing day. And number two, you can hold them for long term. IPOs can deliver high returns if demand of that company is strong, but they are risky because prices may also fall after listing. As a long-term investor, I apply for an IPO only if I believe in the company. And if I'm allotted those shares, I prefer to hold them rather than sell them right away. ETFs are like a basket of stocks, bonds, or other assets that provide instant diversification. They work much like mutual funds, with one key difference. ETFs trade directly on the stock exchange. I prefer index ETFs because they come with the least management fees and are a great alternative for NRIs in Canada and the USA because they don't have access to mutual funds. Too much? If you'd first like to brush up on your investment terms like indexes, mutual funds, or stock exchanges, then check out this video. It covers the basics of the Indian stock market, and I've left its link in the description. Buy today, sell tomorrow allows you to buy shares today and sell them the very next day, before the shares are actually credited to your demat account. In intraday trading, buying and selling happens on the same day, but BTST lets you benefit from short-term price movements across 2 trading days. But there's a risk. If there's a settlement issue, then you may face penalties. And finally, we have intraday trading in F&O. If you're an experienced trader, you probably already know what it is. I don't see myself doing F&O, so I don't want to talk about it. But Zerodha gives you the option of performing intraday in F&O if you open an NRO non-PIS account. And that's it. Those were the 7 key investment options. If I had to sum up what this article says, then I'd say that an NRO non-PIS account makes these investment options possible. And these are my options if I open an NRE PIS account. Now it makes sense, doesn't it? So this list can also help you decide which account type you'd like to open. If you're wondering, what are you investing in, Taskeen? I think you know it by now. I choose equity delivery and ETFs because I am a long-term investor. And to do this, turns out I can open either of these 2 accounts. But I open an NRO non-PIS account. I talk about why in detail in this video, but it was mainly because I want to invest the money I already have in India with fewer restrictions. Even Zerodha recommends an NRO non-PIS account, since it involves fewer restrictions and lesser charges. But you decide what's best for you. And if you figured out which account type is for you, then you can use my link in the description to let Zerodha know that you're interested.
After clicking on sign up, you can enter your email ID and the OTP you receive on your email. And over here, select NRO if you want to open an NRO non-PIS account, and select NRE if you want to open an NRE PIS account. Click on continue, enter your WhatsApp number, then the OTP, and continue with the account opening process.
I am so glad you're still here. After all that theory, it's finally time for some practicals. Let's buy some shares. So in part 1 of this video series, I had sent all my account opening documents to Zerodha. A few days after they have received my documents, I got this email confirming that my new user ID has been created and it asked me to reset my password. So I clicked on login, reset my password, and this is what my dashboard looked like. The first thing I noticed was that I have a negative cash balance. This is the account opening fee that Zerodha mentioned will be added to my ledger after they open my account. So let me pay these fees first. For that, I'll click on funds, enter the amount here. As you can see, my Zerodha account is mapped to my NRO bank account. I could have used any of these options, but I entered my Google Pay ID, clicked on continue. On my phone, I accepted the payment request I received on my Google Pay app, and my funds were deposited, and my balance is not negative anymore. I repeated the same process and added 5,000 rupees more to my account to buy some shares for today's demo. Now, the Indian stock market is open from 9:15 a.m. to 3:30 p.m. Monday to Friday on business days. The market is open as I'm recording this, so let's do some buying. For this first demo, I want to show you how I buy shares of individual companies. The company I'll be buying today is Tata Steel. A quick disclaimer, this is not investment advice. I am not recommending that you buy it. Just for this demo, if I wanted to purchase shares of Tata Steel, I'll first type it in the search bar right here. I noticed two entries. NSE stands for National Stock Exchange and BSE stands for Bombay Stock Exchange. Both are marketplaces where you can buy and sell shares of companies. Let's buy on NSE today. To buy, I'll click on this blue B button. There is a quick tab through which I can place an order very quickly, but just to understand my options better, let's look at the regular tab. I want to hold these shares long term, so I'll select that. I'll click on Advanced. This is where I can select the order type. If I select Limit, then I can specify the price at which I want to buy one share of Tata Steel. Its current price is this, but I can set a limit saying that I want to buy one share of Tata Steel only if its price drops down to 160 rupees, which may or may not happen today. And this is where I can specify the validity of my order. But I don't want to set a limit. I want my order to get executed as soon as possible. So I'll select Market, which means I'll pay the current market price of Tata Steel and my order will be executed immediately. This changes my unit. I can select either the number of shares I want to buy, like 1 or 2 or 3. This section here updates the approximate amount it can cost me. Or I can change this unit to rupees and directly enter the amount I want to use to buy Tata Steel. Let's assume I want to buy shares worth 2,500 rupees. So I'll enter 2,500 here and it says that it'll get me 15 shares of Tata Steel at this amount. Remember this amount, okay? 2,500. Next, I can check this box to ensure that my market order gets executed fast, but it also reduces the risk of price variation. I think it's a nice feature to have. You can read more about market protection on Zerodha's website. If I go back to the quick tab, I notice that I can do the exact same thing. It's set to market order by default, and I only need to fill in the amount or number of shares right here. I'm not doing intraday trading, so this remains unchecked. But I am more comfortable with the regular tab. After double checking my details, I'll click on Buy. And that's it. Now I can go to my Positions tab and see that I've placed an order for 15 shares of Tata Steel. I will show you the brokerage I was charged for this transaction. But before that, let's jump into Demo 2 where I'll buy an index ETF. But first, what is an index ETF? As we discussed, NSE and BSE are stock exchanges where companies are listed. An index is simply a list of the top companies on a stock exchange. For example, the Nifty 50 index represents the top 50 companies listed on the NSE. If you go to NSE's official website, you can also see the list of companies in the Nifty 50 index. They belong to various sectors, including IT, banking, pharma, and more. Similarly, Sensex is an index that represents the top 30 companies listed on BSE, the Bombay Stock Exchange. But who decides which companies form the index? A team of experts do it. Finance professionals, economists, academicians select these companies based on their reliability, performance, track record, so on and so forth. So by investing in an index ETF, I automatically invest in all these companies selected by these experts. Plus, they have very low expense ratios, so I pay the minimum in management fees. For this demo, I'll be buying an index ETF. Let's assume I want to buy the ICICI Nifty 50 ETF, which invests in the top 50 Nifty companies. I am not recommending that you buy it, but just for this demo, I'm going to invest 2,000 rupees in it. As you can see, its ticker symbol is Nifty IETF. You can find ticker symbols of ETFs on the NSE or BSE websites or directly on the asset management company's official website. In Demo 1 to buy, I used the KITE's desktop version. But for Demo 2, I'll be using the mobile app because that's what I normally use. So first, let me log into the KITE app on my phone. In this search bar over here, I'll enter the ticker symbol Nifty IETF. I click on this plus button next to NSE and then click on Buy. The options are the same as our first demo. I want to invest long term. I'll click on this button and change my order type to Market. I'll click here and switch the unit to rupees and enter 2,000 rupees. Remember this amount, okay? 2,000. Turns out I'll get 7 shares of this ETF. After double checking all my details, I'll swipe to buy, and just like that, my order is completed. If I go to the orders tab, I can see both of today's orders listed here. I can also check the portfolio tab where these orders now appear under positions. After the T+1 settlement cycle, these two purchases will show up under my holdings. So after settlement, I went back to my portfolio, and now under holdings, I can see 7 shares of Nifty IETF and 15 shares of Tata Steel. Now let's assume I want to sell all 7 shares of Nifty IETF. To do that, I'll click right here, select exit, and enter the quantity as 7. I can also switch my order type and place a limit order and specify the price I want to sell at. But let's say I want to sell at whatever market price is available right now. So I'll switch back to market. After double checking all my details, I would swipe to sell. I don't want to sell this ETF right now, so I won't execute this order. But if I wanted to, this is how I would go about it. So how do I decide which index ETFs to buy? Everyone has their personal formula, but here are the steps that I follow. Step 1, I go to the NSE and BSE's official websites and see what indexes are available. They also have sector-based indexes. I can click on any index to see which companies are included. From here, I note down the indexes I am interested in an Excel or Google Sheet. Next, I search for index ETFs that track these indexes. I usually start with a simple Google search. For example, index ETFs that invest in Nifty 50 or Nifty Midcap 50. This brings up articles and resources, and from those articles, I note down ETFs from asset management companies that I am familiar with. Next, I look for more details about these ETFs, like management fees. I look for ETFs with the lowest fees. Second, tracking error, which tells you how similar are the returns of this ETF and the index it's based on. The less the tracking error, the better. Third, liquidity, which shows how easy it will be to buy or sell this ETF. Now, where do I look for this information and more? NSE and BSE websites, asset management company's official website, and comparison tools like Ticker Tape or Morningstar. I'm sure you'll find your own websites too. The beauty of this is you can make it as complicated as you want and add more parameters. But frankly, most of my Indian portfolio is just a Nifty 50 index ETF. If I ever feel adventurous, I might explore a sectoral ETF, but that happens very rarely. Now you go and choose your own level of spice, if you like individual stocks or different ETFs, because the Indian stock market really is your oyster. Before we move on to the next section, comment and tell me what investment types do you prefer? Individual companies, ETFs, or IPOs? We all might learn something new from each other. So how much brokerage did I pay as an NRI? Here's an article on Zerodha that mentions the charges. This says I will be charged 0.5% or 100 rupees per order, whichever is lower. Let's calculate. If you remember, my first order was for around 2,500 rupees. 0.5% of that will be 12.5 rupees. My second order was for 2,000 rupees. 0.5% of that will be 10 rupees. So overall, I should be charged around 22 rupees in brokerage for my transactions. To confirm this, I will go to my dashboard, click here, go to console. I'll click on reports and select downloads. Over here, I'll select a date range, let's say this month, and click on email. I downloaded the document from my mailbox, and as you can see, that's approximately how much I was charged in brokerage. This article states that SEBI, transaction charges, etc. will also be applied, and I can see them reflected on my contract note here as well. Turns out I paid 30 rupees overall in charges, which is not bad at all. If I look at tax implications, this article states that Zerodha is responsible for deducting TDS. The short-term capital gains and long-term capital gains rates are also mentioned along with some examples. But I think it's best to talk to your CEO or tax consultant for specific questions because taxation can be different based on the double taxation avoidance agreement with your country of residence. If you've grown up in India, then you've probably heard this a lot. Mutual funds are subject to market risk. Please read the offer document carefully before investing. Let me show you what this means. This is the Nifty 50 performance chart. The Indian stock market has been growing consistently over the years. But if you zoom in on any period, even the last month, you will see plenty of ups and downs. So today's bonus tip is this: use a watch list. Open your KITE app and create a watch list called My Companies or My Index ETFs, and add all the stocks or ETFs that you are interested in. Now check this watch list every day to observe how prices fluctuate. And only when you feel confident in your investments, start with small amounts. Because in the short term, the stock market can be a wild ride. And if you think Zerodha is the right broker for you, then you can use the link in my description to open an account. You using this link will also help support this channel. So thank you. And if you're an NRI living in Canada, then you can watch my Canada Finance playlist by clicking right here. It covers TFSA, RESP, and how to pay the least in commission charges while investing in both Canadian and US companies. On that note, don't forget to subscribe and hit the bell icon because we make useful videos that are crisp and to the point. I am Taskeen, this is The Urban Fight, and I'll see you in the next video.